The boroughs are New York City. The burbs are everywhere else. Real estate is the ultimate game of risk and reward. It's the biggest investment most people ever make. Fortunes are made over a lifetime and lost in a day. And we're not playing with Monopoly money. How do you stay ahead? Who's buying? Who's selling? And why? What do they know? We want the truth. You need an edge. Boroughs and Burbs is your secret weapon, giving you the insider knowledge and strategies you need to succeed in the high-stakes world of real estate. From Palm Beach to Palm Springs, Manhattan to Malibu, we press the experts to expose the pain, find the deals, and occasionally predict the future. That's Boroughs and Burbs, Thursdays, 3 o'clock Eastern, noon Pacific. Because everyone can make money in real estate.
Welcome, everybody. Boroughs and Burbs, episode 211. And this week, Timberland investments. And we've got John Brenard. Brenard on the show, and he's our expert. And you've been doing this since when? 2008?
Yeah, family investment since 2008. We've been investing in Timberland. Our business is, we formally started it in the last several years, but we can get into all that.
Yep. All right. First, I want to share a couple of screens, take you through the introduction properly. Boroughsandburbs.com. That's where you'll find us. I want to thank our sponsor, Grace Farms. You'll find them at gracefarms.org. That's the beautiful 80-acre campus. When I see that, I see a beautiful glass building winding down the slopes. When John sees that, he sees an opportunity to maybe cut down some trees and reap some timber. Roberto Cabrera, he's my co-host in New York. You can find him at robertocabrera.com or at bhusa.com. And Let's Go Shopping is the latest iteration of his monthly newsletter. And I understand that our special guest, John, down in Atlanta, actually is a regular subscriber to Roberto's column. So way to go, Roberto. They're reading you in Atlanta. That's me, John Engel. You'll find me at elman.com. And this is my weekly column. And I've been writing for the last probably 2 years in the New Canaan Sentinel. Our guest, you'll find him at southviewtimber.com. And I've been reading up articles where he's been talking about Timberland as a strategy. So he's not hard to find. With that, welcome, John. Great to have you on the show.
It's a pleasure to be here. This is going to be fun. I know you guys talk about all different types of real estate asset classes, but here to educate about Timberland and how we do it at Southview, and this is going to be fun. So thanks for having me.
So can you tell us about this just broadly as an asset class and why this is an asset class as opposed to something else?
Yeah, so at a very high level, the way that the asset class works is these Timberland properties are typically located in still some of the most rural parts of our country. If I'm just talking about the United States, so the rural Southeast, Pacific Northwest, there is Timberland in the Northeast. Our focus is on the Southeast U.S., so states like Georgia, North Florida, South Carolina, Alabama. And so the way it typically works is you go out and buy, a couple hundred acres, several thousand acres, 10,000 acres, depending on, what your approach is. And you're typically developing that land for the timber returns, and you're growing typically softwoods. So softwood pine is what we grow in the Southeast U.S. That's the dominant species we grow, and you develop it for the timber. You harvest that timber for cash flow, and then there are other things you can do with the land to create returns as well. And that's what we really pay attention to closely at Southview. But at a high level, it's buying large tracts of rural land, and you're managing these stands of timber, of softwood pines in our case, and you're harvesting that, you're selling that to the mills for cash flow, who turn that timber into other products that we use on a daily basis, whether that's the lumber that we use to frame the 1.5 million homes we build in our country every year, the paper products. There are biofuels that are used with it. So there's a whole range of products that these different mills manufacture with what we grow. So I'll stop there and we can kind of drill down on anything I said.
No, that's interesting. How has that product mix? So if we just take those top three, the construction industry, paper, and then say biofuels, I would think that as other global competitors enter the mix, like the Canadians decide, okay, well, we're going to grow more timber, then we're going to shift what we grow and why we grow it. So talk to us about why you pick certain kinds of trees and what are they used for?
Yeah, so the most dominant use case for what we grow is home building and the renovation market, so home renovations. And the reason that we grow the species that we grow is it's relatively fast growing. The Southeast in particular has one of the best climates for the species that we grow. It is considered softwood, but this is still a very strong material that can be used to frame homes and do remodels and so forth. So that's, that the market kind of dictates what product we're going after. And in our case, it's for home building and remodels. But
And it's
you are
cheaper
right.
for us to make it in Georgia than it is to grow it in Brazil or Canada and ship it here on a boat.
Yeah, so we do have one of the strongest timber markets in the Southeast US has now become the largest timber market in North America. So we've surpassed the Pacific Northwest. The Northeast was always kind of, a smaller market, but Canada is really going through it right now. I mean, they've had a lot of pine beetle epidemic that have hurt a lot of their timberland. The government there is just a lot more restrictive with their policies. And the current administration right now is really doing a lot to support our industry. So they've put tariffs on Canadian lumber coming over the border. And you mentioned Brazil. There's also these tariffs that are coming into place for manufactured goods that are coming, pre-made cabinets, pre-made wood products that are coming in, and those are having tariffs on them now as well. So not so great if you're going to be building a home. And so we have to be careful with those tariffs because you put a tariff on the Canadian lumber, which those are in place. You put tariffs on these pre-made goods, which we rely on to keep costs low. That could have a slowdown on the housing market, even though it's meant to build up our business. There needs to be kind of a balance there, because if you hurt those industries too much coming in, which is part of our mix, right? We do produce the majority of the materials that we need here in the US, but we do import those materials as well. And so there needs to be a balance so the cost doesn't get too high to slow down the housing market. And so that kind of remains to be seen where that all shakes out. But it has been a boon for us. The tariffs have been a boon for us. We have seen more development, more growth in our area, more demand for what we grow, because it's just less expensive to source it here without the tariffs.
So at Southview, you're a broker, essentially.
I mean, that is
You're identifying properties for people who are, whether it's a family office who wants it as an asset, whatever the case may be, you're identifying these swaths of land and you're helping them acquire them. Is that correct?
Yeah, so we have a fund structure, but those are our clients. We have family offices in our fund. We have registered investment advisors in our fund. So there's a fund structure where it's a do it for you model. They say, hey, we like Southview's approach, and we have terms for the fund. Those are acceptable to them. And then, yes, we go out and we buy timberland properties on their behalf. We manage it for them. And then we share the returns that we're able to generate with those groups.
So when you buy a 100 acres or whatever the case may be, and you need to essentially start the cycle, how long before you are generating that timber and getting it out?
Yeah, so in our region, the most of the time when we buy a property, it has mature timber on it. So if you kind of see in my background here, that this is what the properties look like. I mean, they're very well managed, and when we buy a property, typically has some mature timber on it. Maybe some is only 5 years old, some is 10 years old, some is 20 years old, but those are different product classes. So the smaller dimensional timber, which is only maybe 10 to 15 years, that's for pulp and paper. The larger dimensional timber, which is 20 years plus, that's for the framing lumber for the homes that we build. So there's always an opportunity for us to create cash flow fairly quickly. I mean, we buy a property if the markets are where we want them to be, because we pay very close attention to where the lumber markets are and pricing and so forth. And that's the beauty of the asset class, is no one is ever forcing us to harvest the timber. It's not like farmland where they're growing these products every year, and if you don't harvest them, they spoil, right? You have to sell the product into the market as it is. With timber, you can just leave that product on the stump and let it become a more valuable product year after year and wait for the timber markets to be advantageous. And you saw that during COVID, right? I mean, you saw, lumber prices spike. We harvested a lot of timber during that time and made some great returns, during that time, because those prices were so high. And so that's what we do in our fund.
Once you do go through a portion, we've harvested so many acres, the replacement of that, you're replacing it, or what are you doing then? That's what I'm trying to understand, is the next iteration.
Yeah. So if we harvest, we clear cut a property, we always replant that within the year, and we start the cycle over again. It's a very sustainable investment. And so that time right before we can have that first harvest is 12 to 15 years before we get to that first product class, call it, the pulp and paper. 20 years plus is really that large dimensional saw timber, which is used for lumber like you see in Home Depot. So it is a longer term asset class when you're starting from zero, when you're starting from a clear cut property. But when we go buy properties for our fund, for example, we're typically buying it with some mature timber already established.
And so if you're buying the land that we see behind you, that doesn't look random to me. That looks like that the timber is organized in stripes. It looks planned. So maybe your client is harvesting 5% every year, 5 to 10%, and replanting, and then moving on to the next 10%, and then the next 10%? Or is it really dependent on what is the spot price of lumber? Okay, we're gonna cut down 15% this year, and when the price is not so good, we'll cut down 5%.
Yeah, I mean, you said it. I mean, it's property to property. It's business to business, depending on what their goals are. The bigger timberland funds, the bigger timber businesses, they're typically feeding mills that they own as well. So they always have to be harvesting regardless of where prices are. Us being smaller, we don't own any sawmills. We can be a little bit more opportunistic and wait for the pricing to be advantageous. But yeah, I mean, there are harvest plans that are put into place when you buy a property of how you're going to manage that for the cycle. So there are guys who go to forestry school and put those plans together, and we work with those types of groups.
I want to introduce you to Scott Hobbs. He joined the show. He's a major builder. He builds $100 million a year of fine custom homes. So he buys a lot of lumber, and he'll probably have something to say about lumber prices. And you guys can connect after the show, and you can sell him some lumber. But I want to pull up and jump in anytime, Scott. I want to pull up the screen that you talked about earlier. You said this is a really good illustration of the Southview timber strategy. Can you take us through this slide?
Yeah. So I think it's important before I dive into our strategy to maybe talk about how the larger funds invest in timberland and the way that we invest in timberland. So the bigger funds, they typically go out and raise hundreds of millions of dollars, and they buy tens of thousands of acres at a time, and they target pretty low returns of maybe 4 to 6%, and they lock up investor capital for 10 years, 15 years, and then they kind of sit back and collect the management fees. And so that's kind of the old way of doing things. It was Timberland has been seen as that really stable part of an investor's portfolio. Before we got started the meeting here today, we talked about how the big endowments have had exposure to it for a long time, and it was a very slow moving, low returning asset class that just stabilized a portfolio. So with us and our strategy, we're a lot more opportunistic. So our fund is a $50 million fund. It's much smaller. We're targeting to buy maybe 12 to 15,000 acres total, and really stay close to every asset to create much higher returns. We're targeting 12 to 15%. So if you pull up that slide you had on there, these are all the different ways that we look to generate returns with a piece of land. So it's not just timber harvesting, although you see that on there. That's part of the mix. But we look for highest and best use opportunistic land sales. The population is really growing in the Southeast. I think you guys are seeing this trend. And so we always buy properties about an hour or two outside of the major metros, Atlanta, Savannah, Birmingham, for example. And that's putting pressure on the real estate prices for development, higher and best use sales. So that's a part of our return mix. Pine straw harvesting, aggregate mining, conservation uses, recreation is huge in our region. Hunting, people just looking for urban escapes to get out of the city, and so that's putting upward pressure on land prices. And we're also able to do farmland leases. So you can see on this tract of land that I have outlined here, and this is an actual tract of land from our region. Some of it has farmland on it. It's not all timberland. And so we lease.
What is the area that within that yellow design?
Like what is the acreage amount?
Yeah, more or less. Just to have an idea.
Yeah, this is probably about 500 acres or so.
Okay.
Yeah, and so if you look up at this upper right-hand corner, this is all farmland. It's maybe 100 or 150 acres. We'll lease that out to a farmer for cash rent, and so that's not timber related, but it's part of the land that we buy. And so we're always looking for different ways to create returns and not just relying on the timber harvesting, because that can be a little bit lumpy. The timber prices can be volatile, as your other guests can probably attest to. So, yeah, we're always looking for different ways. We've done, cell phone tower leases on the properties to generate income. It's not just one thing that we're doing.
So you have your hands in a lot of different industries in some ways, finding places to place people into these spots and maximize the return.
Yeah, and the good news for our investors is the other half of my business is all my acquisition team, and so I'm more on the operations side, investor relations, fundraising, managing the financial side of the business. The other half of our business is our acquisitions team. My business partner, Terry Myers, has been doing this for 35 years. So very successful land and timber investor, started in 1989 with his first tract of land and has traded that into very substantial wealth with this asset class. And that's what got my attention. Is I've known Terry for 20 years now. He helped my family buy their investment. And me, with my background in more traditional finance, I said, how did this guy so far from Wall Street generate so much wealth with something I've never heard about? And so that really piqued my interest, and I've kind of been hooked ever since. And that led to us starting our business, Southview.
It's funny, typically on this show, one of the most important things I want to know is how close are you to an airport, right? We talk to Vero Beach, we'll talk to Montana, and typically it's, how easy is it for a New Yorker to get there? And when we talk to Jackson Hole 2 weeks ago, they're like, they could tell us exactly how many direct flights and indirect flights and how to get there. This is a whole different category because you just said, and it surprised me that an hour or 2 hours out of Atlanta, you're harvesting timber. And I think of that as, wait a minute, that's prime real estate. I could see where you'd buy land now with a 20-year horizon for that investor, and he could say make the 4 to 6% passive return on selling the timber. You get involved and you add cell towers and other revenue streams from that. But I could see at the end of the period of time for something only an hour outside of Atlanta, I could see that somebody sells that off for development. How often is that happening?
Yeah, I mean, you nailed it. We're trying to buy in the path of progress. So we're banking this land and creating returns, with timber harvesting, ag leases, recreational leases, and generating some very stable returns backed by a real asset. And then, yeah, there are these opportunities for these highest and best use sales, and it's happened with some of our own personal properties. So, there's an example I could give you where, there's Savannah, Georgia. We were buying land around the Savannah area, still rural parts of it. And then they announced that Hyundai Meta plant. And I don't know if you've seen this development, but it's one of the largest developments in Georgia's state history. It's an $8 billion investment by Hyundai, and it's bringing a whole 10,000 jobs to the area. And we own land adjacent to that plant. And so the price per acre on that, because the tier 2, 3 suppliers want to be next to that plant, the offers on a price per acre, I mean, it's meaningful of what we paid for it versus what they're willing to pay for it. So that's a real life example where that's happened to us, and we see that continuing because the Southeast just continues to win in terms of population growth, the cost of living, the ease of business. Georgia was the #1 business state again. So there's just a lot of favorable dynamics at play that we feel that the land value is going to continue to grow, and our investors are going to benefit from that.
Wow. It makes me wonder, how big do I have to big to play? Now I'm excited, right? Now I want to buy some timber. Do I have to get together with Scott and Roberto and pool our money together to get 100 acres, 1,000 acres? At what point is this? How big do I have to be to get your attention?
Yeah, so I mean, we have the fund structure for people to come in to benefit from this theme for just what you're mentioning is, we've created a minimum which we feel is attainable for most accredited investors to participate if they think and believe in this theme that we do. So the fund,
I believe.
yeah,
How big do I have to be? I mean, do I need $1 million?
no, so our fund minimum is 100,000. So we're raising 50 million for this strategy. And so far, we've done 5 acquisitions in the fund this year. So we had our first close. We raised some capital, did a first close, and we've deployed that into 5 deals. One of the deals already went full cycle, and this was a very interesting one. We bought this land. It was 500 acres. We paid $2,000 an acre for it, so it was $1 million deal. And within 30 days, we sold 111 acres of it for twice what we paid for it to a business that wanted to expand their operations. So again, that theme of growth, right? Businesses are growing, and so they paid us twice. They paid us 4,000 an acre for it, and then the other 390 acres we sold to the adjacent landowner because he didn't want any neighbors because he has a very beautiful blueberry operation right next door, and he paid us 3,600 an acre for that. So we made our investors a 65% return in less than 60 days. with our approach, and that's just because we stay close, right? Our deals are a couple hundred acres to a couple thousand acres. We're not buying those big packages. So yeah, I
So
mean
we pool our money, we give you $1 million, you go buy next to the Hyundai plant. You might come back to us and say, we're holding this for 5 years. That's our intent. But you might come back in a month or two with these kinds of opportunities and say, I'm returning your $1 million back, and we're going to have to go find something else. Or does it just stay
yes,
in the fund?
yeah. So our fund is a 5-year fund. So it's a 5-year commitment to us. With that deal that I just mentioned, because that was a short term, turn of that property, we took that money and reinvested via a 1031 exchange. So we've taken the proceeds from that and we've bought more land with it. So we have discretion as the fund managers to either reinvest it or make distributions. And with the cash flowing, things that we do, timber harvesting, recreational leases, we plan to have some type of annual distribution cash flow, but this is a total return strategy. So it's appreciation from the land sales, capital gains from land sales, and then these income activities. And so there will be cash flow, but a lot of times and this is what we've done with our own, in our own deals, is 1031 exchanges. We sell land and then we keep that money rolling and buy more land with it.
I love this. Roberto, I know you got questions.
No, our deals are a little faster, and this seems, but at the same time, we're buying residential property, which people hold for a long period of time. And people are holding properties longer and longer and longer. I mean, this seems it really seems great. I mean, it seems very conservative, yet it seems, that it's a return. And
it's not just passive. It's not just passive.
Yeah,
it sounds like the old school passive approach, 4 to 6%, but then you're actually looking at opportunities to grow it beyond. So baseline 4 to 6 and could be much better, rarely much worse.
And I actually, that's, you nailed it. I mean, again, that's what we tell our partners and prospective investors is look, we don't use any debt in our fund either. So it's all equity. So, all of your, and that return, that target return of 12 to 15% is unlevered. So all of your money is going into this real asset. So that's all going to be there for you. The biggest risk is us buying it right. And we feel like we have a pretty good sense from doing this for a long time of what these properties are worth. And so the biggest risk is us overpaying for the land. And so we buy it right. And worst case scenario, yes, you're going to get that steady land appreciation of 2 to 3%. We do some timber harvesting, that's another 2 to 3%. You get maybe 7%. That's if we do none of these other activities, opportunistic land sales, recreational leases, all those other things to stack on top of it. And so that makes the investors who have come on board very, very comfortable with what we're doing.
How good? What has been the return in the last 5 years? And to be fair, what was it before COVID? Just in case anybody thinks that it's just been good in the last 5 years. How's it been going? What's the average return over the last 5 and over the last 10?
Well, I can tell you about our fund. We launched this fund at the beginning of this year. So this fund we're still raising for it and deploying capital. But right now we're running at about a 1.3 multiple. So we've done about a 30% return for our current investors. So we've exceeded our return target, our preferred return of 8%. But I have any number of case studies I could show you going back over different time periods, including the COVID period and beyond, where we're exceeding that 15% return with our approach.
And how many?
All right, so
go ahead, John.
So if the trick is in picking the right land, I mean, there's only so much you can do on the management side. And so when evaluating a potential deal, what are the top three indicators you analyze first?
Yeah, I mean, location and access are our top priorities for us. Location in our business means, again, we want to be proximity to these metros, right? You know, an hour or two outside of these major metros. We want to see that there's that path of progress coming our way. But also, as equally as important, more important on the timber side is you need to be close to the mill infrastructure because the product that we're dealing with is a very heavy material and you'll be eaten alive with fuel costs trying to move it any further than 50 or 100 miles to a mill, which then turns it into the end products. That's ultimately who's buying our timber from us. And so I have systems that I use which tell me all, you know, where all the mills are across the southeast, to make sure that we're always buying within 50 to, you know, less than 100, ideally 100 miles from these mills. That, and these are major operations. I mean, these are owned by multinational corporations. I mean, some of them are mom and pop mills, but some of them are owned by very large multinational companies. So location and access, the biologic, the makeup of the property, you know, soil types, the productivity, you know, how productive is it for growing timber? That's very important. And you know, those are really top couple things that I'm looking for. You know, location, access, and when I say access, I mean I want to be sure that uh, I like to have road frontage. You know, some of these major interstates, if we have some good access to those, good internal road systems that are built, and so those logging trucks can get in there in all different types of weather. Because that's a great way to generate excess returns too. Is if you have a very accessible track and you have a big storm that comes through, and most of these other timberland tracks are wet, and this heavy equipment can't get on there, but yours is a dry track, maybe more a little bit upland, you can get better pricing because the mills need to stay busy. They need to keep them producing because it's very finicky equipment. If you turn those mills off, right, it's a lot to get them going again. So if you have that access to that track during these weather events, that's a good thing and something we pay attention to. So, and my acquisition guys, I mean, they're the best in the business. I mean, they've been doing this for a very long time. They know what to look for, and within, I mean, Roberto, John, all you guys on the meeting, in your respective asset class, I'm sure you're the same way. Within a couple minutes of being at a property, you kind of know what's there, and that's how my guys are. So,
How many like mom and pop owners that it's a generational piece of land. They don't even know what to do with it. They've had it forever that you are acquiring. And, you know, does that become difficult because you're trying to acquire something? You know, it's like having someone like an old woman here who owns two or three townhouses and trying to, you know, talk to her about value and making her feel that you're making a fair deal for them, but at the same time you're giving them value and then you're going to take over the property. I mean, do you deal with those, especially I'm thinking in all these rural environments? You know, I had a buddy who they have a petroleum business, and they've bought land all over the place. And
mhm.
you know, FedEx came. They're at the crossroads of two major interstates. FedEx came and said, "We want to rent your land. Don't worry, we'll build our entire facility. You know, here's a lease for 25 or 50 years," and they don't do anything, and they're just getting checks right, left, and center. But they acquired the
Mhm.
land from like these little mom and pop people that they've kind of gotten to know. And I mean, I'm sure you're dealing with that, right?
Oh, all the time. I mean, buying land is hard. I mean, this is,
You don't just get to sit behind your desk and look at spreadsheets all day. You actually have to go talk to people.
I'm telling you, and you know, my acquisitions guys, I mean, that's a big part of what they do. I mean, I get involved in some respects, but you know, they're on the phone all day. I mean, this is, they're talking to landowners, and Roberto, I mean, the majority of the land in this country is still owned by individuals like you and me. And so yes, it's a very personal thing. It's an emotional thing. People's identities are wrapped up in this land. And so it's not easy. And so, I mean, if you had 20 million bucks and you wanted to come down and buy some good land in our region, just because you had the 20 million, I mean, that wouldn't, I mean, yeah, you wouldn't be able to do, you could buy some land, but would it be a good deal? I mean, that's the difference. And so, you don't find, like the deal I talked about, 2,000 an acre, just coming down from, not being from this region. So it's difficult. It's a difficult thing to do.
Not only that, a New Yorker coming, like this New Yorker coming down and saying, what does he know? A friend of mine used to work in Minnesota, and they worked for an advertising firm. And when all the people from New Yorker comes, they said the PIBs are coming, the people in black. So
okay.
That's what we would be. So we need someone like your expertise who can come and have coffee with the old lady and chat with her and, be nice and easy with her.
Yeah, Roberto, I think you and my business partner Terry could probably talk for days about the hand holding and the conversations and the time. I mean, Terry has deals that he's been working on for the last decade. I mean, speaking with landowners and some really nice packages that are owned for generations that only come up for come up for sale once in a lifetime.
Yeah.
So yeah.
I want Scott to help me ask some hard questions. Like sometimes lumber prices go down, right? Right, Scott? I mean, I gotta think that, between weather and other events, that farming is a historically difficult business. And so you could talk about steady 2% harvesting return and 2%, but and how it's almost certain to get a 6% return, and then there's just upside beyond that. But come on, Scott, sometimes lumber goes down, right? I mean, in your industry.
Well, I actually has a question for you. So that there's always we always have this giant risk that we've got a few $100,000 to $500,000 worth of lumber on a project, and guys are worried about pulling the trigger and committing to a price, or do you let it float? Do you get caught? And there's questions about hedging. And so how do you guys, and for small people, it's very difficult to hedge. Some of our lumber yards they'll lock in a price where it won't go above, and then they'll split if it goes down. And by locking in the price, they essentially buy the lumber, put it in their yard, and it's sitting there. And if the price drops, they'll sell it for a profit and split it with you. If the price goes up, there's your lumber sitting there. But are you able to hedge your lumber sales, or do you have the good future contracts, or how do you protect yourself and also help to maximize when things are good?
Yeah, we don't do any hedging. It's just, I mean, to your point, I mean, we have a good amount of timberland under management, but not to the size where it would, warrant some, sophisticated strategy where we're, moving markets and so forth. But those strategies are available. They actually just created a futures contract just recently called SYP for Southern Yellow Pine. And you can look that up. So that's a new vehicle. But yeah, so the short answer is we don't do any of that. How we protect ourselves, and I've had any number of groups come to visit Terry and me, or we go to conferences, and everyone's always trying to put debt on us. Everyone's trying to have us leverage our strategy. And so what's protected us is using all equity, is paying cash, owning all of our land outright. And that way we're not beholden to anybody. And like I said, that biological growth that happens year after year, 5 tons per acre per year is what it grows. And so, we just stay close to what the prices are.
You're saying it's a natural hedge. You just don't cut down the tree. If the prices go down below a certain threshold, you don't cut the tree down. You wait till the prices come back up. I mean,
Yes,
that seems like a natural hedge.
So, but
yeah.
I was actually surprised. One of our clients is invested in Timberland, and like during COVID, stuff sort of shut down for a year or 2 years, and so the trees grew, and then the trees turned out to be like basically unsaleable because the mills are set up so efficiently and perfect that they need the tree that's, I'm making it up, but 20 inches. And at 21 inches, they're like perfectly effective and efficient. And at 21 inches, it's like, it doesn't quite work out right. And so we don't want your trees anymore. Is that a common thing or an uncommon or just like specific for like telephone poles or I don't know.
Yeah, I mean they have they have specifics. I'm curious. Your friend or partner that owned Timberland, was he making money during COVID, or did he not benefit from that period?
Well, as many of my clients do, they're always making money.
Right.
During COVID, I don't think he made money. Well, he told the story about how again under the Timberlands that it was supposed to be great, and then it turned out not. Every time something was supposed to
Okay.
be really good, it's like
Yeah.
but you didn't think about this other bad thing that could come up. It's like, well, you never
Okay.
told me about this. I didn't know.
Yeah. I gotcha.
Yeah.
I gotcha. I asked that because the we have such close relationships with these different mills in our region that even though you may see those prices, that doesn't mean you can get them. And
Sure.
so, you need to have these long-standing relationships with these guys who run, these businesses because those prices aren't for everyone. And so, um, just because you see that on, CNBC, that doesn't mean that you're, as a timberland owner, that you're going to be able to get a logger onto your property, to harvest it, to get it to the mill. I mean, there's a lot that you need to have in place in order to move quickly to do that, and we have that in place. So I'm just curious, of your friend or partner if he was able to take advantage during that
As
time.
a, well, I mean, as a plug for you, I mean, this is reality, a hedge for him under a much bigger portfolio.
Yeah.
I'm sure if he had been paying attention, he would have figured out how to make all the money. This was something that was a hedge that he wasn't. So again, I mean, it brings up once more that you need to have a smart person who's focused on this. Otherwise, as
Hmm.
with any investment, it looks easy until if you don't know what you're doing, it looks easy until you lose all your money. And so you got to have
You
somebody who's paying attention.
you nailed it, Scott. I mean, this is all we do. I mean, we don't have any other businesses, and this is all my acquisition team's focus is, and Terry's focus. He lives and works in rural South Georgia, and wakes up and is in the land, every single morning talking to everybody in the industry. So you can't do this from a Bloomberg terminal, right? You have to be you have to be present, boots on the ground, in order for you to do this successfully.
I'm
And
sure
yet,
that. Go
and
ahead,
yet,
Jeff.
I gotta think that tariffs and the global markets and weather are rocking your fairly consistent world more than ever in 2025. I mean, every time they announce a tariff is on or off, I mean, I got people, I'm just a realtor, and I have people coming to me saying, what does it mean that I won't be able to get cedar and cedar roof material from
Mhm.
Canada anymore?
Mhm.
That suddenly they've just turned off the spigot. I mean, I have to think that your world is getting rocked all the time by these major global forces that are happening. Is that true, or is it just my perception?
Yeah, I mean, I think for the big, multinational companies, the Rayoniers, the Warehousers, I mean, they have fairly diversified businesses, so they've been weathering, things pretty well. Uh, at our size, thankfully and the segment that we focus on, more of the mid-sized properties, a couple hundred acres to call it 2,500 acres, we're still finding great deals for the land, right? For that real estate. It has, good stands of timber on it. And a lot of the pricing for this timber is hyper local as well. So it's county to county. And so there's always going to be some demand somewhere. And yes, the prices will come down, but again, there's no one ever forcing us to harvest our timber. So that just speaks to the kind of
And
that
you're not
strength of.
competing with Canada most of the time or Brazil. You're competing with the guy in the next county.
Yeah, I mean, there's always some bigger forces at play, and things that we pay attention to, but um, that's why our plan is to stay small. I mean, we have ambitions to grow Southview into a big business. We're targeting to have $1 billion under management. We want to grow to have a series of funds that are 50 million, 100 million, 150 million, which for our asset class is small. I mean, these guys are raising hundreds of millions, billions of dollars to do this. I mean, JP Morgan now, they bought a business called Campbell Global in the last couple of years, which is a huge timberland manager. I mean, they're now one of the largest timberland owners, in the business. JP Morgan is, because they see the value in it, but they're playing a different game. And so I want to stay small. I want to stay nimble, stay close to the assets. And so, yeah, I mean, we're going to feel those, those macro things that you're talking about, but because of our approach, not using any leverage, we own everything outright. We can kind of weather those better than maybe even some other real estate strategies, right? Multifamily and doorknobs and so forth. Which, right, if you buy those right, you can do well. But I think stuff bought in the last couple of years are struggling, whereas we've been making money through this period.
John, just considering climate change, I mean, you're dealing with the earth, you're dealing with weather, has over the past long term, over the past 2 decades or whatever, has climate become a little bit influential in what you buy and where you buy it?
Yes. And so we have experienced some weather events in our industry that not that we haven't seen them before, but there was Hurricane Michael, which you guys were aware of some years ago. But just last year in 24, we had Hurricane Milton and Hurricane Helene, which blew through our region and took out a good number of timber plantations, guys who had been managing these for 10, 15, 20 years, and they got taken out by these hurricanes. And I'm not trying to sugarcoat it, because these are some of our friends and family who were hurt by these storms. The good news is that the government stepped up, and there have been some programs to support these groups. I mean, we had some stuff that was damaged too, but yeah. So the way that we protect against that is we don't buy all of our land in one contiguous tract. So we're not buying 5,000 acres in one block. So if a hurricane came through, it would just hit that in one shot. We buy a couple hundred acres in one county, maybe 1,000 acres in another county. And it was interesting the way that this hurricane came through our region. It was almost like these little tornadoes. And so it took out one side of the road, and on the other side, the timber plantation is perfectly healthy, and nothing happened to that guy. So there are these weather events, to answer your question, which the fact that we had 2 of those in a short period of time, I don't know if that's climate change or what you want to call that, but they are weather events that affected us. And we mitigate that by being diversified, by not buying all in one area.
Are you looking at other areas of the country besides the Southeast?
For now, no. I mean, there's 22 million acres of timberland in the state of Georgia alone, and so there's we have a long way to go before we exhaust opportunities just in Georgia alone. So yeah, this is our backyard, right? I mean, you know Manhattan and the Hamptons, that's your backyard. No one's going to ask you to go to Seattle and be an expert. So although you might have some knowledge I'm not aware of. But we like the Southeast.
Is there insurance for any of this, for any natural disaster or anything? Do you engage in that? Is it not worth it? Is there any, or can you not have, can you not get insurance? How do you guys view that?
Yeah, we don't buy insurance for our timberland properties. There are products out there that the insurance companies would be happy to sell you, and charge you an exorbitant amount for. It just doesn't make sense. The products are too expensive, and for the level of risk, with these events that happen, it just doesn't make sense. So, but bigger groups will do it. I mean, people do. There are those products available, but we just don't do that for the reasons I mentioned. By being diversified across different areas, we just haven't had to have that. So, yeah.
I like it, but I got to think that there's some risks that I'm not understanding that are totally beyond your control, have nothing to do with the tree and the land itself. For instance, if builders like Scott aren't building, and there can be any number of reasons, interest rate movement, the builders stop building, no demand, right? Too much regulation. When the builders stop building, the demand for lumber goes down. And as he points out, if you don't have 20-inch trees, you're not optimal. And so while it's easy for us to say, well, I'll just let them continue to grow and it'll be a 21-inch diameter next year and 22 the year after that, there's got to be an optimum point at which we cut down that tree for optimum efficiency. And that timing just might not align with Scott's need for the trees. And so I got to wonder, to Roberto's point or Scott's point, how do we hedge against that? How do we smooth out some of that volatility? I love the model. I love the fact that you can wring revenue streams out of so many different aspects of the land. But I gotta think that there's some things out there like interest rate movement, and demand from builders that are affecting you, even though it's a hyperlocal strategy just
Mhm.
in Georgia, not affected by the Canadians and the Brazilians, for the most part.
Yeah, I mean, there are risks, not buying the land right, like overpaying. I mean, yeah, there's no getting away from a deal if you overpaid for it, because when you buy a property, there's a timberland property, there's the dirt value, and then there's the timber value, and you could overpay for that, and then there's no level of timber harvesting that's going to help you recover from that. So buying it right is very important. There are the natural risks like we've talked about, which can hurt you. I mean, you see mill closures from time to time as well, so that's a risk as well. Um, where we are in the Southeast, there's typically anywhere from 10 to 15 mills that surround the properties that we buy because it's such a big industry. Georgia is the number one forestry state. But if you were growing your timber for a certain product and that big mill that was the biggest buyer of it moves out or closes down, international paper says, hey, this just doesn't make sense, we're going to build new technology somewhere else. You do see that. So there are these unforeseen risks. I'm not trying to paint the picture that this investment has no downsides, because it does, and people lose money all the time in this space. I feel like we have an approach which does a lot to mitigate that, and we're pretty high up the learning curve because we've been doing it for a long time to not have that be the experience for our investors and our partners.
That being said, now that we've gotten the risk, question out of the way, I'd like to end on a high note, on a positive. I mean, it actually sounds like you are wringing a great deal of revenue out of every investment, and that you're spreading these investments around the Southeast. Sounds like a great strategy. What do you hope what kind of a return are you hoping for? You're putting your own money, your own career into this. you got to be believing that it's going to do better than 6%. How high is up for John Brenard?
Yeah. So with my background, I came from wealth management. I did that for 10 years. I showed up to an office every day. I sold the same, market linked strategies as everyone else. I had a successful career. I had $100 million wealth management practice that I built. But it just, it wasn't fulfilling in the way that being more entrepreneurial and building my own business and being so close to an asset that I really truly believe in. I mean, it's something that you can put your fingers and toes into. I love the outdoors, and so being able to get on these properties and take investors around and show them the land. I mean, I really feel like I'm doing the thing that I was meant to be doing. It took me a while to get here. I'm 39 years old, and it took me the first 15 years of my career or more to kind of get to this point. But the goal, as I kind of mentioned, is we want to have a respectable business. We want to build Southview into a respected name in investing in timberland, in land investing, and build something that's bigger than me and my partners. Because all these returns that we're generating, we could be doing these deals ourselves. I mean, the deal that I mentioned that we put into the fund, that would be a deal that we would have done personally. And so we are now sharing these opportunities with investors for the first time. And those that choose to get in with us into this $50 million fund, I mean, we're going to close this thing when we hit 50 million, and those that don't get in are going to have to wait for fund two. And so, I get that question of, why would you go and give away these returns to investors and not do them yourself? Well, I've been doing friends and family deals for a very long time. I mean, that's and that is a way that we've built wealth for ourselves, but we want to share this with other investors and scale this and build a bigger brand, that can outlive us, have the Southview brand be bigger than just, us as individuals.
Roberto, we've done 211 shows, and I'm trying to compare this to the shows we've done on buying trailer parks. And I gotta say, if you own a trailer park, it can be kind of aggravating because your tenants, they talk back, right? And and there's like complications. And then we did the one on self-storage units. You could buy self-storage units and you think, that's a nice, steady, no hassle, investable business. This sounds more fun. Don't you think, Roberto? This sounds more fun.
You know what? It's like there's something natural about it. There's something that's like there's heritage in it. There's something it's about the country. It's about the land. I really embrace the space. I think it's really amazing what you're doing, and it's great.
It sounds like it's good for the soul, not just the pocketbook.
Exactly.
It's good for the soul.
I appreciate you saying that. I mean, these are still some of the most rural parts of our country. I mean, the biggest skies, the cleanest air, right? The cleanest water. I mean, these are the places that we work, and that's why I was drawn to it. And so, yeah, a big part of what we do is being good stewards of the land too, and making sure that's how it remains. So,
I mean, it occurs to me if you're not making a decent, fair, level return on all those trees behind you, somebody's just going to cut them down and put up a solar farm or do something else. I love the fact that that it's productive and long term and beautiful, because the alternatives are invariably less beautiful and less good for the planet. So kudos to you, and I wish you every success. This looks awesome.
Yeah, it's great. This was unexpected. Unexpected.
Yeah, unexpected.
I expected great things. I was impressed.
Thank you, Scott.
Are you buying any Christmas?
I enjoyed it, guys.
Are you buying any Christmas tree farms? I have to leave you on that thought because it's Christmas, and I went to the
Right.
Christmas tree farm and I looked around at about 500 acres in Easton, and I thought this guy is doing well selling Christmas
Yeah.
trees on 500 acres.
Yeah, we're not in the Christmas tree business. I mean, those guys are, North Carolina, they're kind of in different parts, but yeah, support those guys. Buy a real tree. So
I love it. Thank you, John.
Thank you
And
so
until
much.
next week, Roberto, I guess I could
Scott,
take
great to
us through
see you.
our ending screens, but you know where to find us. Boroughsandburbs.com, RobertoCabrera.com, and I'm theengleteam.com. And you are Southview, what's the website?
yeah, southviewtimber.com.
Excellent. Thank you. And
Thank you guys.
HobbsInc.com.
Enjoyed it. Thank you.
Bye.
Bye-bye.